Good morning, good afternoon, and perhaps even good evening. My name is Matthijs Koorn, Research Director, Payments and Commerce here at MGI Research. Today, I'll be sharing my outlook for 2021, and as a lot has happened, I'll be doing that at a high 30,000 foot level. Please feel free to reach out to me. I'll be on the platform for the next 2 days and schedule a one-on-one or just have a chat. Look forward to meeting many of you over the next couple of days. Enjoy the session and look forward to answering your questions.
So now we come to the MGI 360 ratings. We've been very busy. We've added 4 new ratings and we've refreshed all the existing ratings. I'm on the platform, as I said. Reach out and let's have a conversation. Happy to explain to you more on what we see in the different ratings and how you can use them. So published relevant research. I've used some of it. Take a deep dive in headless commerce if you like. The top 10 payment trends that a CEO must understand. I've quoted 3. There is obviously 10 in the notes. We've spoken about Brexit. We've looked at B2B very specifically in light of virtual cards. And last but certainly not least, how to scale monetization globally. We see an increasingly complex payments landscape. Choice is good, but it adds to the complexity. The complexity comes from investment rounds, partnerships, but also increasing complexity on the side of commerce requirements and of course the variety of commerce platforms. Even though payments there is consolidation taking place on the payment space, it's mainly at the enterprise end so far, with First Data merging with Fiserv and FIS acquiring WorldPay. At the same time, we still see new companies emerging, such as Silverflow, a very promising processor on the acquiring side. On this slide, I have mapped a simple, probably somewhat oversimplified market overview, and let's discuss some of the things we see. We typically see that small and mid-sized companies will choose either a PayFac or an MOR, depending on their precise needs, with usually whether selling internationally or not making the difference, whereby the merchant of record offers best return on investment when selling internationally, and there is a need to support different business models in order to get speed to market and have access to a single solution covering all these use cases. Take Modus Link, a merchant of record focused on selling physical goods with all these propositions in a single solution. All these MORs, whether selling physical or digital goods, carry the risk and responsibilities so you can focus on your core business and execute against strategy. Stripe, Square, Molly, PayPal are all examples of PayFacs, typically accessible via API and offering a partner ecosystem, offering different functionality to add to payments. Think of fraud, sometimes tax, email campaigns. We then see payment orchestration. That is more a toolbox, and I have more about that in a later slide, and I've recorded a panel discussion with 5 leaders from different payment orchestration platforms. We then come to the full service payment gateway, which of course, in addition to the gateway, typically have their own processing in-house. Companies to think of are Worldline, Checkout.com, and WorldPay. They typically aim at ERP-centric, more enterprise-sized clients. Integration of these platforms is a custom job and usually takes months, not weeks, as they are integrating into ERP system. It's very complex and specialized, and similar to PayFacs, they have an ecosystem through partnerships with fraud systems and commerce platforms connected. Then we see a group of very tech-centric companies doing it in-house, getting a payments license, and the aim is to monetize payments as part of their value proposition, make it a unique selling point, but also create a barrier to entry. Think of companies like Uber, Airbnb, and Takeaway.com. On the side, I have listed some of the dimensions that add to the complexity. Compliance, for instance, things like VAT and sales tax, data privacy. Do you want to, or can you handle that? Expansion into new countries. Do you have local entities or not? Do you have the capability to handle different currencies? Localization, things like language, currencies, payment methods, and support. An example being the EU, where despite the euro, there are still over 10 currencies, 25 different languages, and many local payment methods. Channels. Do you sell on Amazon or not? Do you only sell via retailers? Or do you sell via a combination of direct marketplaces and a offline channel? In 2020, we saw specifically brands choose to go direct. So here is a big opportunity, but here is also a channel to understand. And a new channel comes with its own unique challenges. You'll hear me talk to the CEO of Basel, Jan-Willem Roest, a logistics technology leader, or Logitech, talking about the cost of Wemo, where is my order, being 50% of support calls. So definitely something to keep in mind, whether you want to do this in-house or not. Integrated payments. Make payments part of your solution and your value proposition. Think of billing, ticketing, or reservation software. There is a new breed of PayFacs operating in the space and attracting serious VC funding. Payrix and Phoenix being examples. Payment orchestration. Some of the tools that should be considered when optimizing payments or building a payment strategy. Routing, as I said before, it's always at the core of this strategy, even when you're in a steady state. Routing cards from a specific issuer to a specific acquirer in order to improve the authorizations, and you always want to route as locally as possible. You may want to route commercial and business cards or procurement cards, P cards, to a specific acquirer, so their features, typically level 3 data and reporting, such as VAT, being supported by that acquirer, as not everybody supports that. Then there is something that I call always on as part of business continuity. Downtime should be a thing of the past from a technological perspective, but also the switch from card present, i.e. physical retail, to card not present, e-commerce, is seamless. In other words, commerce-centric. Alternative payments. There is a world outside of cards and a growing one, often local champions. Usage varies country by country. Take Ideal in the Netherlands. It has a 65% market share. And then if we look beyond that, we see things like direct debit, we see vouchers being used, and we see real-time bank transfers growing in popularity globally, driven by PSD2 in Europe and initiatives like PIX in Brazil. Fraud tools. There is a range of tools available depending on the type of product or service or vertical that you sell in. There are choices to be made. Also, the type of screening differs. Some of these tools can start already at the sign-up stage through blacklisting certain email addresses, as an example. Agility. How well are your systems aligned? The Agile monetization framework gives you help. Ask yourself, for instance, how long does it take to enter a new product in my billing system? If my physical channel is down, how easily can I operate online? The answer will give you an indication of your agility. MOR, or Merchant of Record options. So let's take a look at B2B and why it's so appealing, either as a CFO to optimize your organization or as a fintech to address this vertical. The market size is roughly 150 trillion globally, with no more than 10% currently addressed by fintechs. The rest runs on legacy rails provided by banks or by the likes of SWIFT when it comes to cross-border. Less than 5% runs on card rails in terms of payment methods. Checks and cash is about 30%, and 65 to 75% is paid via ACH or wire transfer. 15 to 20% is cross-border, so even more complex, slow, and potentially attracting FX costs. In this slide, I have split the opportunities according to phase of maturity. So some examples, we see Visa and MasterCard, and to a certain degree American Express, building an ecosystem in terms of partnerships, but also acquisitions, and expanding their value proposition and reach well beyond cards. All of them have publicly stated that they're looking to process any type of transaction, no longer card rails, but payment rails. That's their objective. Cross-border B2B. Typically, this flows through slow correspondent banking, which makes it expensive, as I said, slow, and it lacks the ability to include data for matching or reconciliation, so adding another piece of disruption. Fintechs are offering virtual account networks for speedy, sometimes even instant payments. Things like the gig economy is very global, and we see several fintechs offering solutions specifically aimed at that niche. Think of Airbnb or insurance payouts, where we see both wire transfers as well as payouts on a card being used. Travel and expensive, even though it's a very mature market with business and corporate cards, many of the providers in that market are now looking to move to the start of the process, and they look to capture the approval process in order to get a place in the more broader procure-to-pay process. Accounts receivable and accounts payable processes are very separately and often managed by separate departments and use very diverse application landscapes. So we see CRM, ERP, billing and payouts, all aspects of AR and AP using different systems and different departments, making it very difficult to know where you stand at any given time. And lots of paper in the process is no help either. We see several fintechs looking to break down the silos between the two processes, automate them, as well as integrate these payment systems.
So let's take a look at B2B and why it's so appealing, either as a CFO to optimize your organization or as a fintech to address. The market size is roughly $150 trillion globally, with no more than 10% currently addressed by fintechs. The rest runs on legacy rails provided by banks and companies like Swift for cross-border. In terms of payment methods, less than 5% runs on card rails. Checks and cash account for about 30%, and the majority, 65 to 70%, is paid via ACH or wire transfer. About 15 to 20% of B2B is cross-border, so more complex, slow, and potentially attracting an FX element. On this slide, I have split the opportunities according to phase of maturity. One of the things we see is that Visa and MasterCard, and to a lesser extent American Express, are very active in the M&A and partnership space, building an ecosystem, and are, of course, changing in terms of value proposition and building a reach beyond cards. Visa and MasterCard have stated that they're looking to process any type of transactions on their rails, not just cards. We then see cross-border B2B in the proven but accelerating bucket. Cross-border B2B transactions typically flow through correspondent banking setups, which is expensive, it's slow, and most importantly, it lacks the ability to include data for matching or reconciliation purposes. Fintechs are now looking to offer virtual account networks for speedy, sometimes instant payments. One example is the gig economy, which is very global in nature, and we see several fintechs offering solutions specifically aimed at that market. Think of payouts from Airbnb or insurance companies, and these solutions include wire transfers as well as payouts on cards. Travel and expenses, which is in the proven and maturing phase, where we see a lot of business and corporate cards being used. At the same time, the providers of the expense management software are now looking to get in at the start of this process and pivot towards being an integral part in the procure-to-pay process. We then see in the emerging B2B opportunities that accounts receivable and accounts payable processes are very separated and often managed by separate departments. To make it worse, the system landscape used is often very diverse. CRM, ERP, billing, and payouts all use different systems, making it complex and inefficient. To make matters worse, gaps are filled with manual intervention, increasing inefficiency and costs, but also increasing chances of errors. To make matters worse, lots of paper is used in the process. Fintechs are looking to break down these silos between the two overarching processes, and more importantly, are looking to automate them, as well as integrate the different systems used. On the AR side, optimizing and automating reconciliation takes priority, know where you stand, and on the accounts payable side, automating payouts to more accurately manage cash, but also to avail of supplier discounts. Many companies are multi-banked, so open banking helps with aggregating data into a single platform and addressing the opportunity to improve reporting. In my session with Eric Bushman from WorldPay, some of these elements are addressed. We covered quite a lot of topics, and we covered quite a lot of topics at a high level. So I wanted to highlight some of the sessions in the payment tracks. I have made comments here and there already, but in addition to that, I'd like to point out the session with Bradley Rees of checkout.com, where we'll be discussing B2C in various countries and what the impact is of that last step in the process, the checkout step. We'll be discussing how $20 billion of revenue is lost due to false declines, but we'll also be talking about $13 billion of revenue sent to your competitors by non-optimizing your checkout pages and payment methods. With Eline Blomme and Bruno Sanchez, I'll be talking about emerging markets such as Russia, Brazil, and Mexico, and the opportunities and challenges that these markets offer. With Michel da Silva of ModusLink, I take a deep dive in what it takes to sell physical goods online in a cross-border fashion. And with Rob Hoiting of Ideal, I will be talking about how Ideal, as the world's oldest, and I think everyone agrees, the largest alternative payment method, how they are pivoting into new realities such as open banking.
So we've reached a point where most companies should get a payments manager on board in order to define a payment strategy. Here is a generic framework, which of course differs per company. It differs per product or service that you offer, and depending on where you are in the life cycle. But every company has a CEO, there is a sales function, and there is somebody responsible for finance. Let's not overcomplicate things initially. You can also start with buying from your own company online and closely observe what you see, and no doubt you'll find things to improve on, perhaps even things that don't work. Also ask yourself, what happens if my payment provider disappears overnight, like we saw with Wirecards, which is where I started with today? How quickly can you respond to a competitor offering new pricing or introducing new products or services? All this brings responsibilities and expectations from the different functions. The customer will want to buy from the channel he or she chooses at that moment. If they have a question, they'll choose a channel to interact with you. You need to know which those channels are, and you need to be present there, both from a commerce perspective as well as from a support perspective. The CEO wants to be in control, he wants to see resilient systems, and he wants to see accurate reporting. The board will want to see that same accurate reporting, and they want to deal with a compliant company. The CFO wants to see costs that are in line with the value delivered, and they also want to have the risks under control. The CFO will expect reporting as well, and he probably wants to see instant reporting as much as possible. On the sales side, the Chief Revenue Officer wants to see those channels optimized. He wants to see an optimized customer journey. And he wants to see an agile go-to-market in order to respond very quickly to what the competitors are doing. The COO wants to make sure that support is able to monetize interactions. He wants to take care of business continuity, and he wants to make sure that the order systems are aligned with fulfillment of orders. So now we come to the MGI 360 ratings. We've been very busy. We've added 4 new ratings and we've refreshed all the existing ratings. I'm on the platform, as I said. Reach out and let's have a conversation. Happy to explain to you more on what we see in the different ratings and how you can use them. So published relevant research. I've used some of it. Take a deep dive in headless commerce if you like. The top 10 payment trends that a CEO must understand. I've quoted 3. There is obviously 10 in the notes. We've spoken about Brexit. We've looked at B2B very specifically in light of virtual cards. And last but certainly not least, how to scale monetization globally. I would like to take this opportunity to thank you all for listening. As I said, I'm on the platform, happy to chat, happy to do a one-on-one, and I would like to thank you for being present here at the Monetized Forum. Thank you very much.